Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with James Grant at the New Orleans Investment Conference. James, thank you for coming on the show.
You are entirely welcome, Steve.
Yes, pleasure's all on this side of the table, sir.
All right. Well, already contentious.
I'd like to start out. Every question I always ask my guests at the beginning is, what is your macro view of the world economy, financial markets today?
You know what that does? It filters out people who really are really deluded. Because if you actually answer that question, it betrays your ignorance. Listen, I can't answer the world economy. Here we are in New Orleans. We are assembled to talk about gold. And I would like to talk about gold. I'll tell you, I rode down the elevator to our interview with a flight attendant. And she says, "Where are you going?" All dressed up and handsome. She said, "Handsome."
Oh.
And I said, "Well, I'm going to give a speech." And she said, "A speech? What are you going to talk about?" And I said, "Gold." And she said, "Everyone likes gold." And I think that's getting off on the right foot. But of course, everyone doesn't. And nor would we contrarians be happy if everyone did. But it's such a funny topic, isn't it? We live in a world of these technological miracles. Have you heard about the rocket that Elon Musk catches on the way down with the giant pincers?
I've seen it. Yeah.
And Zillows.
Yeah.
Right. Okay. So you have to look twice before you otherwise think it's a UFO.
Yeah.
Like, okay. So compare and contrast with gold, which has no moving parts. It is inert. Doesn't say anything. Never goes on CNBC.
Yeah.
And yet we are meant to think it's a valuable thing. So one would wonder why. You could see the merit and the worth. One of those great technological things. AI, for example, must be worth something, right?
Yeah.
Or these medical miracles that seem to tumble out every day from the news. So what I'm wrestling with is not so much the world economy, about which I am wholly ignorant, but rather the monetary side of things and what will pass for good money. And oddly enough, what I think is going to pass for good money is the least technologically sophisticated thing we can think of.
Yeah. Yeah.
Right? It
So-
just sits there.
Yeah.
Well, it's kind of it's in the periodic table in the Yale, which is kind of scientific. It's kind of STEM. But it's not really what we think. We think of technology, it's not that.
Yeah.
So that's a paradox that I wrestle with all the time.
So is that your highest conviction trade going forward?
I have a bunch of low conviction ideas.
Okay.
But I have a high conviction that gold has great utility in monetary matters.
Yeah.
It doesn't yield anything, right? It doesn't cash flow. So you can't figure out a price. There's no price book ratio. There's no price anything ratio.
Yeah.
It's in gold is an opinion.
Yeah.
So that's what I said when I jokingly said low conviction trades.
Okay.
I am old enough, Steve, that I have finished with high conviction trades. Dogmatism is not something you carry into your late 70s if you're anywhere observant about the world.
Yes. Yes. What is your opinion on, recently we had the election.
And I read about that.
You read about that. Yeah. And pretty quickly after that, we kind of had a re-rating in some of the commodities, especially gold. What's your opinion on that?
Oh, I'm not sure if it was algo driven, but it was very much like the 2016 shakeup. People who do this for a living have to have it and have to trade, and that's what they came up with. The first 100 days, let us call it, of any incoming administration that promises to change the world, that's going to excite people.
Yeah.
And here we have Elon Musk, who does these screwy things with rockets.
Yeah.
It seems if he can do anything. And he is going to lead the Doge Commission. Get it?
Yeah. Oh, yeah.
Right. He goes, oh, good. That means there's some more government spending. It means that inflation is controlled. It means it means that the world is fixed. And Steve, I don't think the world is fixed.
Yeah.
And I think that monetary affairs are as troubling as they were before, and fiscal affairs too. That is to say, the government was a real problem with regard to its income statement and balance sheet.
Yeah.
Oh, the Fed's a problem too. It's about, the Fed's broke? Dude. Hypothetically and theoretically, yeah. It has a stated capital of $43 billion, but has run up operating losses well above $100 billion. People don't talk about it, doesn't seem to matter, but the figures are there every Thursday on the Fed's balance sheet for H41. So, so no, things are not fixed. The 100 days excitement will obscure problems. That's okay. And maybe one can't rule out miracles, but the third people have absolutely ruled out laying a single finger on entitlements, which is the essential fiscal problem.
Yeah.
So that would seem to forestall any great fiscal improvement.
Yeah.
So I think that the Fed increasingly is the prisoner of our encumbering debts. It has to, you have to wonder whether it can almost technically could react to a new flare-up in inflation, given the interest costs in the public debt, given the leverage structure of so much of corporate finance. So I don't know nothing about world economy. In fact, I might know very little about the New Orleans microeconomy, but I do have concerns about these isolated, that's why I say fiscal matters. Sorry, not financial matters, monetary matters and fiscal matters. Yeah.
Yeah. Yeah. Okay. And how do you see silver playing a role in this?
I don't pay as much attention to silver. There was a very a very widely discussed book produced about 1980. It was called The Golden Constant.
Okay.
And it was about the striking propensity of gold to hold its value over the course of hundreds of years. And there's a companion volume a couple of years later. It's called Silver, the Restless Metal. And I laughed out loud when I said, "This restless metal. So silver is like a lunatic, right? It's all over the very high volatility. So it is not exactly a monetary metal, nor it is exactly not a monetary. It's partly a monetary metal.
Yeah.
It's partly an industrial metal, and it is. It's got a lot of leverage followers, so it's led the way up in the precious metals recently.
Yeah.
So I like silver for that reason. I'm a gold guy.
Yeah.
But I've given you a non-answer, perfectly reasonable question.
Okay. So definitely you see good things on the horizon for gold if you hold gold.
I tell you, I would love to see great things on the horizon for you all. The horizon for me is ever clouded. And the first I will explain to, I hope more than a few of the audience members. I bought Krugerrand in 1980, and I stood in line to buy it. Everyone was bullish on gold. It was the Iran hostage crisis. You must have read about it in kindergarten.
Yeah.
And there was a big inflation problem you might have heard about in history books.
Oh, yeah.
Right. And the administration of Jimmy Carter was kind of disrespect to the world over. And so gold was running, no crypto competition.
Yeah.
So if you want to lay down a bearish bet on the dollar and or the American position in the world of gold. So I stood in line in cold outside a lower Manhattan coin dealer and bought my first Krugerrand cost $850.
Oh, wow.
And that was the high for 25 years. And that's what I mean by low conviction. We've got lots of high convictions about the place, the proper place, the deserved place of gold in the world. I've got a lot of ideas and convictions about how gold has been, is now, and will be metal world without end.
Yeah.
I have those convictions. But as to, and I observe, it's not a conviction, it's an observation that gold has moved upward and to the right, as it were in the chart, upward to the right, against the paper dollar forever, for a long time.
Yeah.
Forever, as we mortals measure time.
Yeah.
So I'm bullish.
Yeah.
And I have expectations. But if you ask me, do I have high convictions? That's for guys your age.
Okay. Well, I wasn't
Trying to get a straight answer out of me.
old enough to
No, you
remember
whatever it was.
the early 1980s.
Shins on that.
But I've heard a lot of stories about it, and around Reagan was trying to do the same thing.
Well, let me tell you some crazy stories. So Paul Volcker comes in October 1979, at least October 6th, 79. He lays down the law. I am going to choke off the growth of bank leaders. I am going to kill inflation dead.
Yeah.
And see if I don't do it. So gold that was up back there, $500, now it's $400. And it immediately goes to $8. Yeah, by January, it was $850.
Yeah.
Right in Volcker's face.
Yeah.
And years later, I was happened to be sitting with a bunch of people after a grants event, and Paul Volcker was the speaker. Where a dozen of us.
Yeah.
Volcker let down his hair a little bit, and he said, "Kind of drove me nuts when gold went up. I hated it." But see, I don't think that Jay Powell spends a minute a day thinking about that.
Yeah.
He might think about MicroStrategy and Dogecoin and what's that about? But you might think about the Federal Reserve Bank of Chicago Financial Conditions Index, which registers very easy and accommodative.
Yeah.
But so gold has done all the things you would have expected it to do.
Yeah.
And many of the things you would have expected it would not do in my 50-year experience with it.
Okay. All right. The way I've played this so far, now this is my first gold bull market that I'm playing here. But so far I bet on the majors. Did that about around the beginning of the year. Had an amazing run. We basically had a double, in the majors. I'm thinking, although you've lived through this,
why are you retired?
Unfortunately, 100% of my portfolio was not gold. Although I'm regretting that decision now.
That's a good start in life.
Not bad, right? And so I've kind of run the majors up a little bit. What do you think is the next part of it? Is it going to be the royalty plays, the juniors? What?
Well, I think I like the royalty plays. They are, I think, more than most other gold-oriented investments. The royalty plays are investments.
Yeah. Okay.
You're getting a contractual interest in the revenues of a gold producer. You're not exposed to the
risks,
the middle and bottom lines. The risks are frightful.
Yeah.
If you buy a single name gold stock,
yeah,
it's going to be the one in which the bears come and destroy the electrical wiring. Actually happened. It wasn't the bears. It was the Wolverines came. I think Wolverines came in and ate a considerable amount of copper wiring. It's not helped the upward re-rating in that particular project. So anyway, there are many speculations in gold. There are the juniors that are known somewhat in a derogatory fashion as moose pasture plays, right?
Yeah.
They are when the day of the $6,000 bullion price arrives, and it'll arrive soon because they haven't got any money.
Yeah.
Okay. But the majors have some solidity, and certainly I think Franco-Nevada, I guess, is the granddaddy of all of them, and Pierre Lassonde is of course the figure and the face we associate with that this great gold investor and a wonderful and it's a wonderful presence in the world of gold, and that is a substantial investment, I would say.
Okay.
The trouble with My friend John Hathaway, perhaps he's your friend too. He's everyone's friend. Was this rock gold miner's father who's been around a long time, and he observes a little bit testily that the entrepreneurs, or the corporate employees, the gold mines, don't, in the whole, seem to have much of an idea of what it is they mine. There's no appreciation of what gold is. They might as well be mining iron ore. They don't understand, and they're bad allocators of capital. They raise equity capital at the wrong times, and they dilute the shareholders.
Yeah.
And it's vexing in the extreme to be invested in them. So they're not good businesses. But what they are good for is for riding a really great gold bull market because they're leveraged, of course, to the gold price.
Yeah.
So if that's what we have, and we may well have it, we may well have a really great gold market.
Okay.
We've had them in the past, and in between really sleepy or not so great gold markets and gold bear markets, in which you have seen your prized, suppose, sturdy and investable miners go down by 80 and 90%.
Yeah.
That is not a life-enhancing or life-extending event. So that's what that means by low conviction trade. One ought to have conviction, but one ought to be aware of the possibilities for reversal. After all, again, to repeat, gold, the price of gold is an opinion. And I would consider my opinion pretty well informed. I've been in my line of work for 50 years. I've read some books. I've invested some money. I've lost some money to understand this business.
Yeah.
And so I consider myself pretty well informed, but you can't throw everything God at it. It can break the heart. In fact, it can do more than that. I've known people whose lives is wrecked because they were so sure of themselves.
Oh, okay.
And it's not, believe me, there are people out there after this run in cryptocurrencies who are so dead certain that it's to the moon.
Yeah.
They are in the way of wrecking their lives.
Yeah. Yeah.
And that's, by the way, that is one of the problems with an irresponsible monetary policy. It provokes these things, these bubbles.
Yeah.
And people will always be people, but a reckless monetary policy brings out the worst in speculative conduct.
Yeah. Yeah.
Certainly most fun too.
Yeah. You kind of force people out onto that speculation curve.
Yeah, and yes, you do, and that's the individual investor portion. But in a world of a very dignified and full-suited, fixed income fiduciary work, it also forces people out into the risk end of the curve.
Yeah,
because they can't keep up with the index if they don't do what everyone else is doing. So it's a testing time. Bubble times are always testing times.
Yeah. Awesome. Well, I know you got to get up on stage. Thank you very much. Any final closing thoughts?
That's what I do. Never stand in line to buy anything.
That's why we're contrarians, right? James, thank you very much. How can people follow you and your work? Where should they go?
Oh, they should. No, I won't encourage that. Well, if they insist, they can go. So I run a publication for the past 41 years called Grant's Interest Rate Observer. And it is actually fabulous. And if they want to look at it, they can read a sample issue or two. And it's very expensive, but not expensive enough in the opinion of a proprietor. So they can go to grantspub.com or just Google Grant's Interest Rate Observer.
Okay.
Yeah.
All right. We'll put a link down in the show notes below. Kiss.
Welcome all new readers.
Okay. Thank you very much. And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy. They can't stop talking about tech stocks. Have yourself a great rest of the day, and we will talk to you next time.